You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back here. It is Wednesday, time to roll out the Futures Rundown. No rest for the wicked. Remember, theoptionsinsider.com/pro. Congratulations to our pro member, Joe Lewis. I want to get your name in the hat there, listener. That's a fun prize, if I do say so myself. Head on over to the pro. Join the fun. It's a cool crew hanging out over there. Speaking of cool folks joining me, let's get on out, see who's joining us on the old Futures Rundown today. I'm pleased to welcome on our pal, Mr. Jermal Chandler from Tasty Live. Jermal, welcome to the Futures Rundown.
Glad to be here, Mr. Longo. You are the hardest working man in trading.
Mr. Jermal, let's tackle some pressing futures topics, in particular inspired by a recent question that was very, very interesting. Let's get out to a little bit of Futures 101.
It's time to shine some light on this mysterious marketplace. It's time for Futures 101.
All right, everybody, welcome to Futures 101. And like I said, this topic was inspired by a question that came in last week from Alan, one of our longtime pro members. And he said, I'm enjoying the show and I'm getting into energy. Well, I'm glad to see that, Alan. I know you've been floating in the options world for a while. Like many of you, you're getting sucked into the world of crude and nat gas. I get it. A lot of volume, a lot of volatility out there. He says, it seems like WTI is featured on the show each week, but a lot of outlets like CNBC like to talk about Brent crude. Which should I be focusing on? Thanks. And it led to an interesting discussion about the nuances, the differences between WTI and, of course, Brent crude out there. So, of course, we have touched on WTI a few times in the past. Go search the archives, listeners, for the early episodes of this program from late last year. And indeed, you'll see I went into crude with our buddy Dan Gramza and a few others. But again, focusing on WTI. So we'll do a little mixing and matching here today. But before we get there, Jermal, when I say to you, Brent versus WTI, what really stands out to you? What are the big major differences?
The number one thing I think about is Europe versus Texas, honestly. And while I've never traded Brent, Brent typically, various reasons, but that's pretty much what I think about. The difference between Europe and WTI, Europe and Texas. And I just always end up trading WTI because I'm more used to it, I guess. I'm more cognizant of where that price is and relative to where gas prices are, I guess, in my head. So I think that's what it makes me think of.
All right, let's get to some of the specifics out here, listeners. As Jermal alluded to, WTI is very much the American benchmark. West Texas Intermediate is what it stands for. Obviously, it comes from Texas, so a lot of the domestic viewpoint, a lot of the domestic trading around crude oil is typically geared around WTI. That is the hot contract for crude oil over there at CME, does the lion's share of the volume. So for a lot of the domestic traders and producers, WTI is the benchmark. But again, you go overseas, and a lot of people talk about Brent. Brent comes from the North Sea. That is the typical reference product for, if you're talking about, OPEC international producers. Most of them tend to key off of Brent. A couple of similarities, couple of differences as you're looking at them. Let's look at the WTI futures contract versus the Brent futures contract. As I mentioned, WTI goes up on CME. We have talked about the contract specs of this one before a couple of times on the program. Again, it's CME. They picked up the old NYMEX contract. They have it listed over there now. The contract size for the big boy, 1,000 barrels. That's a big, beefy contract. If you're going to trade that, that's also physically delivered. So we joke in our intro about having the truckload of crude oil dumped on your lawn in the middle of the night. This is one of the products that could do that. Obviously, we joke. You're not going to have that happen. We've talked about the myths of delivery a million times here on the show already, but this is a physically settled product at the end of the day. It's designed for the producers and the refiners out there who really want to take delivery of this at the end of the day. So the contract size, 1,000 barrels, that is going to be your multiplier out there. Tick size is going to be pretty much a penny a barrel, works out to about $10 for each contract you have for each tick out there. The Big Brent contract, going to see a lot of similarities out there. It's not an accident, listeners. Also sized exactly the same, 1,000 barrels. Tick price also going to be pretty much a penny per barrel, which works out to, hey, surprise, surprise, $10 per contract. Oh, by the way, the ticker symbol for WTI, which you might see floating around out there, is typically CL. So you might hear a lot of people saying the shorthand for WTI is CL. The ticker symbol for the Brent, it's going to be BRN. Some platforms might be BZ. And the other big difference is that the Brent trades on the ICE platform, whereas the WTI product trades on the CME platform. Mr. Jermal, anything you've noticed about the similarities or differences so far between the big Brent and the big WTI contract, sir?
Yeah, like you said, that contract size is similar. I've always noticed Brent, like I said, trades a little bit over crude oil. No, that does not mean there's an arb there, folks. It's just kind of how the products work in general. But I like I said, I always typically will either trade, whether it's the big contract CL or the micro contract. Just really depends on contract size and what portfolio I'm trading. But I mean, they're similar. That's the one thing you can rely on. They do move in the same direction. They're highly correlated. Say for very few times where something's going on domestically in one place versus the other, but they pretty much trade the same, which is kind of a nice feature.
That is a nice feature indeed. I should point out, by the way, the ICE contract is cash settled, so a little bit of a difference there, listeners. But as you're talking volume-wise, how do those two contracts really stack up? They're pretty similar. CME has an ADV of right around 1 million contracts. You add up all of their futures volume. The ICE futures, slightly higher, but pretty much in the exact same ballpark, about 1.1 million versus 1 million for the CME. So you're not seeing a huge difference from a overall volume perspective. I think we talked a little bit about liquidity on the show recently. But right now, straight ADV-wise, they're pretty much neck and neck. Now, if you're saying, man, 1,000 barrels, that's a hell of a lot of crude to bite off, CME and ICE both agree with you. They both have mini/micro contracts. In the case of ICE, they have the mini Brent contract, they call it. It's 100 barrels. So obviously your multiplier going to be only 100. So now it's going to be a penny a barrel for your mini tick. So obviously that works out to $1 per contract for each tick in the underlying. Same deal with WTI. They have a micro WTI contract, as they call it. Same tick size is going to be a penny per barrel. Same multiplier, 100 barrels. So again, every tick is going to be $1 for every futures contract that you have in the account. And Jermal just mentioned the Brent WTI spread. Brent typically trades over WTI at a premium. That's just the way these two products trade, listeners. Right now, as we're coming into the start of the show, that Brent WTI spread is at about $4.22. That's down from almost $4.80 just a day ago. So it's dropped about 12% in one day. So we're seeing some evolution on that spread right now, but it's also up from a little bit shy of $4 a year ago, about $3.92. So it's up nearly 8% from where it was a year ago. You can trade these. These are listed on both CME and ICE. Obviously, they're going to trade them in terms of whichever product they do the most volume in. In the case of ICE, it's Brent. So they're going to quote you the Brent WTI spread. Again, same size, 1,000 barrels, tick of a penny per barrel. So it works out to $10 per contract. CME is going to go the other way because they do more WTI business. So they're going to quote you the WTI Brent spread. Again, same size, 1,000 barrels, a penny per barrel, $10 per contract. Should note, volume-wise, a little bit of a difference. Right now, today, coming into the start of the show, the ICE spread put up about 40,000 contracts. We're not seeing a ton of volume in CME. So if you want some volume and liquidity, the ICE spread is the way to go. And one other thing to note here, Jermal, you'll see if you're digging into these products a little bit of a difference. Everyone talks about April of 2020 when, of course, WTI went negative. All you Brent fans will point out that Brent did not. When the NYMEX contract back in April of 2020, WTI closed at negative 37.63. That front ICE Brent contract was at 25.57. So a little bit of a difference there. Obviously, there's differences in delivery that account for that out there, but something to bear in mind as you're looking at these two products. Jermal, as we're winding down here, just curious, any final nuggets you want to leave with our listeners on the differences between Brent and WTI when you're trading futures?
Well, they do say one is light sweet crude, that is WTI, and Brent theoretically is sour. So the question becomes, Mr. Longo, would you be interested in doing a taste test between the two? What would that look like? What would that be like? I wonder. But yeah, I mean, as far as differences, I always end up trading CL. I've never actually traded Brent. I've always been aware of Brent's price. Always been aware of the difference. But CL is fairly easy. And, after a while, like us, if you've been looking at this product for years and years, you kind of get an idea of at least sometimes. I mean, it's a little weird in the Chicagoland area because our gasoline prices can vary wildly, but sometimes you have an idea of where oil can be trading versus your current gas prices and kind of how that lines up. Obviously, this gasoline being a product of crude. So I always kind of, it's kind of a great market awareness thing to be aware of where oil's trading versus what kind of prices you're paying at the pump. And some people love to hedge their gas prices at times by trading oil, which can be a fun way to sort of keep you engaged in trading as well.
Yes, we all are net short crude oil at the end of the day, listeners. Just something to bear in mind as you're watching these markets. Unfortunately, that music means we've come to the end of another futures rundown. Man, we did a lot of living.
Well, Mark, I tell you, I love these type of markets. This is great. It's a little unnerving when you see markets fall the way they have, but it's opportunity. You got to find opportunity. You got to be smart and keep some cash available to them because you just don't get these opportunities very often.
Wise words, sir. And in the meantime, if folks want to check out what you're putting out over there in the land of Tasty Live, where should they go? What should they do, sir?
TastyLive.com is our website. We also have a Tasty Live YouTube website, which YouTube page, if you will. That's where a lot of our live content is. We have shows on 8 hours a day these days, and we start at 7 a.m. We go through 4 p.m., and we're putting out a lot of content all the time. My shows specifically are Engineering the Trade at 1:45 to 2:15 p.m. Central every day except for Wednesday. And then I also do Futures Power Hour, noon Central to 1 p.m. Tuesdays and Thursdays. But we got a ton of content out there. And of course, my name is Jermal Chandler, Jermal Chandler. You can look me up on Google and easy to find.
Check the man out. He's putting out a lot of great content over, a lot of great stuff over there at Tasty Live if you're not checking it out already. That's going to do it for us on the network today. Back again tomorrow for a double header, kicking things off with our friends over there at SIBO and the Flow Master, talking all things unusual activity and all sorts of fun on the option block, followed by checking in with our friends over there at CME. What's lighting it up on the futures options front over there on This Week in Futures Options. Friday, of course, we wrap up the week with volatility views. Then we come back one final time exclusively for you pro folks to talk the weird, the wild, the crazy trades over there on Options Oddities. Again, that one's been quite the banger of late, so make sure you're checking that one out. Only place to get it, theoptionsinsider.com/pro. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.